If you invest in stocks, the confusing part during tax time isn't paying the tax. It's looking at the T5008 slips and wondering, what do I do with this? In this video, I'm going to walk you through what are T5008 slips, what is ACB or adjusted cost base, and what is the proceeds of disposition, and how do you calculate and report capital gains on your tax return. So we're actually taking a look and seeing what is capital gain, how do we calculate that? If you look at this form, the Schedule 3 form, you can see you have your proceeds of disposition, your adjusted cost base or your ACB, and your outlays and expenses, and your net capital gain or loss. Okay, so what is proceeds of disposition? Your proceeds of disposition is how much you end up selling your stocks for. So if we're talking about stocks, for example, we can say maybe we sold 1,000 stocks of a company and we received $30,000 in return. Okay. Then because we received $30,000 in cash, that would be our proceeds of disposition. Our adjusted cost base, or ACB, is how much did we pay for those stocks, shares of stock, when we bought them. Yeah, how much did we pay when we received them, when we got them, when we paid for them? How much did we end up paying? What is our cost base? Okay, so if we ended up paying 15,000 for those same 1,000 shares, now we have a proceeds of disposition of 30,000. Our adjusted cost base is 15,000. Do we have any outlays or expenses? We're going to say no. Okay, it's zero. Sometimes you do if you have commission. Nowadays, a lot of the platforms, they have zero commission when you're trading, buying and selling. So, but back in the day, you had it used to be like $750. And then, yeah, you pretty much do your proceeds of disposition minus your activity adjusted cost base, minus your outlays, and you get your net capital gain or loss. Okay. And whenever you are filling out your capital gain schedule and you're looking at your T5008, you're going to include that on Schedule 3. But let's go back and think about what actually is the T5008. So one thing that you need to know is that the Canadian government of Canada, ends up receiving every single transaction that you have from your institution in which you're trading with. So they end up sending them every time you purchase and sell something. Okay, so what happens is you receive a slip and it looks something like this that they receive from your institution for every trade that you make. Okay, and at the end, the Canadian government actually does have a summary of all those trades that you have in the year, and they can see your total proceeds of disposition and your total adjusted cost base, and to see your total net capital gain or loss. Okay, so they want to see exactly if you are in a positive or in the negative, and you'll generally get a T5008 summary slip from them, as well as you'll also receive it from your institution. So your bank institution will also track all your trades. One, because they actually have to send it to the CRA, and two, because, well, they want to make it easier for you for tax purposes. Okay, and generally what that looks like, it looks like a huge booklet that they give you of all your trades in the year, and then they give you a summary of all the trades that you have with your adjusted cost base and your proceeds of disposition for every share that you sell. For example, if you sold Tesla earlier in the year and then Microsoft later, you would see two summaries of both Tesla and Microsoft. Okay, so very important to note that the T5008 will be what is given from your bank institution to the Canadian government, and they also send it essentially a summary to you, which will match that T5008. Okay, so it's very important. Before, Canadian government used to have kind of empty slots where in your T5008 summary they wouldn't have the adjusted cost base and they would treat it as zero. Okay, so that's incorrect because you obviously didn't receive shares for free. But if they don't get that information, they'll leave it as zero, and then it looks like you have a very large capital gain. So I've seen it in practice before where on your T5008 you actually have this massive gain as if you were a brilliant trader, when really they're just filling in your adjusted cost base as zero, making it look like you didn't you receive those shares for free. So you want to go through that T5008 summary and make sure that the adjusted cost base is given to you and that it's accurate. Okay, you don't want to file with incomplete information because you could have a massive tax bill. Okay, and you might not even know why, because you might not have had a good year at all, and you might think, well, how am I paying such huge such a huge tax bill? So mistake number one, if we're looking at common mistakes, is reporting the T5008 as income and not putting it on Schedule 3. So maybe you report it somewhere else, but if it's capital in nature, so you're not a trader, day trader, it's not going to be business income. It's going to be, capital in nature. You're just investing, okay? The number two is double counting the same sale. Make sure you're not double counting. Sometimes things can be incorrect and the same sale shows up twice. And obviously maybe you did sell it twice for the same amount and the same amount of shares. But if it's not correct and it's not the same, then you should not double count it. Another thing is ignoring losses. So you don't want to ignore losses because losses can help you cover those gains that you have. Okay, so if you had a gain of $100 and a loss of 50, your net gain would be 50. Okay, so you don't want to ignore the losses. You want to include those losses as well. Okay, and yeah, you need to be careful, just making sure that you receive all your slips, your booklet from your institution and matching it with whatever is on the T5008 that the CRA has. Okay, so you want to go through both the T5008 and the booklet that your institution gives you to make sure that those numbers are the same. So if you are planning, if you do end up going through here and you're looking at your Schedule 3, you'll find that there is a part for publicly traded shares. So that's where you're going to include any income, any capital gain that you need to show on your tax return, on your T1, on your income tax return. You'll need to show it in that area, publicly traded, and you'll have to have the number of shares that you traded, the name, every single one. A lot of the times you don't have to list every single share that you trade. A lot of people do it actually in total. So you just kind of take the total number of gain, like the total number in your booklet that you had for your total proceeds, your total adjusted cost base, and include that as a one-liner. And of course, if CRA asks for more information, you're going to give them that booklet. You'll scan it, send it to them, and that'll give you the support there. Okay, if you are planning on filing your income tax return, I suggest using Wealth Simple Tax. They are the most user friendly. They have a really good Schedule 3. It won't be difficult for you to input. And if you can see the link in the description and you use that link and you fund your account, you'll get an extra $25, which is really great. So Wealth Simple Tax, that's the software that I use, and that's the one that I recommend. If this video helped you, make sure to subscribe. I post clear, practical Canadian tax guidance videos. Remember, this is general information, not personalized tax advice.